Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Over the past 2 weeks, the March corn contract has been range bound, finding great resistance at the 371 number. Our projected February 1st date has now come and gone. What we're now starting to believe is that the market might break out of the sideways movement that it's been in and finally make an attempt to break out up to the 380 to 390 price threshold. If markets are able to sustain the 371 area and move ahead this week, we believe that there's a good probability that markets will then make a move up to the next level of resistance, which happens to be that 380 to 390 zone that we spoke about. The point of control currently rests at 389.75, and one standard deviation below that point of control is at 370 3/4. If prices once again are able to do well in holding above the 371 number, you'll notice that prices have the capacity to make a quick run up to the next level because of the lack of volume that exists in between the two price thresholds. So depending on how prices close out this week, if we're able to find strength above the 371 number as we close out on Friday, I believe there's a good probability that markets could make a run up to that 390 price level. The December contract has done well in holding up above our geometric support line that we've highlighted here for you. Prices are starting to trend up above the 393 half number, and if prices are able to close cleanly above this area this week, we believe, like the March contract, we could make a run up to resistance, and for the December contract, that price level looks to be about 405.5. The point of control for the December contract rests at 397, 396 3/4, and above that, one standard deviation above that number is at 407. Prices are very close to making it to the point of control. That's where we're going to see our first major potential resistance or our first major test. Above that, prices should have an easy way going up to that 407 number that we looked at. After having found support several weeks ago, March beans has been very slow in creeping up above that support number. It's been range bound for the past 2.5 to 3 weeks and is finally coming into a potential turn point demarcation on February 3rd. Depending on how the market looks to break out of this zone, it would either move down or move up. But by the way we're looking at it right now, we anticipate that the markets looks to make a next move upwards to go and test upside resistance near the 900 number. Over the next couple weeks, it's going to be key to see how the price action actually moves. Market has been overbought for some time, but because of the nature of how it's been and where it's been holding up, the movement here tells us that the market is trying to form an uptrend, at which point it can break out from this zone. You'll notice here that the March contract has been making higher lows as it makes its approach to the point of control. And it is the point of control that has been containing the recent sideways price action. So because of the nature of how it's made subsequent higher lows, we believe that the market has a high probability of making a next move or making an advance up to the next key threshold, which sits at about 907. The November beans contract in a similar fashion has been sideways to up for the past several weeks, but the key thing that we're noticing here is that the volatility bands, both below and above, are starting to move up. So in this upward movement that we're noticing here, the bands might be telling us that the market is predisposed to perhaps making an upward movement where it would find resistance at the top end of the bands. It has been able to make a number of closes above the point of control. Point of control sits at 889 and a quarter, so it stands to reason that prices can make a move up to the next price threshold of 906 and a half, which is 1 standard deviation above that point of control. As far as we can see, the July wheat contract is predisposed to potential continued weakness. After having made a high near the 500 number, it's really had a tough time being able to hold up and has been sideways or down to sideways in its movement the past week. Our trend line that we've marked out for us off of our geometric shape has been holding pretty well, but if prices are not able to break the 500 level prior to breaking our trend line, we believe that prices are probably predisposed to failing and retesting previous lows. On the flip side, it is possible that the corn and soybean markets, if they find strength, can help to pull up the wheat market itself, at which point the next key level we'd be looking at is about the 500 number. The July wheat contract has its point of control at 518 and a quarter. 1 standard deviation below that threshold is at 490 and a quarter, which is currently the area that it is struggling with. So before any advance can truly happen, we need to get above that 490 and a quarter number in order to even test that 500 level that I recently spoke about. The March crude contract has been moving very nicely along our support and resistance price thresholds. You'll notice initially that the 2810 number ended up being great support where the market bounced. Also, after having bounced off of that level, the market found great resistance at the top end of our support resistance bands for volatility-based support and resistance. Since that time, the market has then dropped back down and is retesting previous lows. So depending on how it's able to survive at this price threshold after having been at the overbought level, if the markets hold this retracement here, we can see a move to the upside. Although, alternatively, what you'll notice is that there has been a shift with regards to the volatility-based bands. The volatility bands have dropped all the way down, and we will not find potential support until 21. So if the previous low of 28 is broken, we anticipate that the markets would make a fast run to about 21. Holding near the 28 number or above through the course of this week is going to be very key for the crude oil market. Thank you very much for joining us for our weekly market wrap-up. We look forward to touching base with you again next time. Have a great week.